Great deals get funded, bad deals do not. You need to know the difference if you expect to get money from an investor or lender. I'm David Newby. I'm a funding consultant in Maryland. I've been doing this for about 5 years. And after going through a lot of situations where I got people into our system for consideration for their deal, be it real estate or business or any other project that they needed funded for, I saw on the back end the unfortunate demise of their prospective funding scenario. In short, they didn't end up getting the money. I've been on the flip side of the coin where I took deals to our investors or lenders, and the deals actually turned out to be deals, and the individuals that wanted the money ended up getting the money. So if you do enough of these deals or leads, you work a few of them, you'll find out quickly what gets funded and what doesn't. I've worked with hundreds of deals that I've actually taken through the process of being considered for the check, but not always getting approved, and some did get approved. But the long story short is that I've taken enough leads to our funding partners to know what kind of piques their interest as far as them writing a check. And I'm here to share with you today just a few simple steps to take in order to get your deal funded, be it real estate or any other type of business project. We deal with a lot of different industries, so no specific industry is beyond us. As long as it's a deal and it's something that we can take confidently to our funding partners, there's a good chance that you can get the money. But I'll let you know that you have to follow a certain process to make sure things are in place before you take the potential deal to our partners or to any investor or lender out there, because what you may perceive as a deal in your mind may not be a deal to the person who's actually coming out of their pocket and putting their money on the line for your situation. Let's just call it a situation. Okay, so again, I started in the funding industry about 5 years ago. Never expected to be here. I actually stumbled upon this industry after being denied funding for myself in one of my projects years ago. I got denied. I went to the funder and I asked them why. They pretty much told me that it was a credit issue. My credit score wasn't high enough to get the amount of money that I wanted, and they suggested that I fix that and try back again later on. And you probably have been through that same type of situation. You were almost there getting the money that you needed, but something came up that didn't really pan out too well for you, and it cost you the bag, so to speak. So me at the time, what I basically did was I went to my lender and I asked them, okay, what do you guys typically look for to fund projects? So they told me what they looked for. I took note, and ultimately they ended up offering me the opportunity to work with them by bringing them leads of people or viable projects that needed money from them. They told me how they work, and they said once you connect with people that are looking for what we provide and they are qualified based on these factors that we give you, you can bring them to us. We'll fund them more than likely, and we'll give you a commission. So, I put kind of two and two together. I said, hey, look, I'm connected to the funding sources. I'm connected to a lot of people who need money, investors and business owners and things like that need money for their projects. Why not be the bridge between party A and party B and connect the two and close deals and help everybody out? So that's kind of how I got into the funding industry. I hated finance growing up. I hated it in college. I hated all my accounting courses. I hated my finance courses. I hated economics. I did exceptionally well in those courses only because I had to pass, and I was pretty I was pretty studious. I like to learn and try to like pass my courses with flying colors, so to speak. You know, I had times where I didn't do so good in school, but once I actually decided in my mind that I wanted to do well, I studied a lot and I ended up passing all the courses that I hated. So here I am full circle. Part of the work that I do in life is a funding consultant, and now I'm actually liking what I do. Where in the past I hated finance, because I'm liking it. I'm seeing the philanthropic aspect of it. I'm able to help people out. I'm able to build up the country financially by moving the capital around. I'm able to help people fulfill their dreams with regard to business or real estate investing or investing. They need money a lot of times, you know. So I'm happy to be doing what I'm doing, and that's what I want to avail myself to you and other people for, to be able to be a bridge for you to get access to capital that may be kind of elusive from you ordinarily. All right. So with that said, I'm gonna kind of my nose is itching a little bit. Sorry about that. Every time I get on camera, my nose itches. But I want to give you a couple of key points to consider when bringing a deal or opportunity for an investor to invest or lend you money. A couple of key points to consider in order to get the capital that you need for your business or your deal. A couple of key things. There are many other smaller things I think that you can kind of like look into as far as getting someone to write you a check, but these basic things are required to get at least someone to strongly consider giving you money. And if you don't have these three things in place, you probably won't get a serious look from an investor or lender. All right. So with any project that you bring, real estate project, whether or not you need you need funding for a hotel, or it's a fix and flip, or it's a ground up construction project, or anything like that, one of the first things that you need is a deal. Do you have a deal? Is it something that you can look at and say, okay, this is profitable? This is something that I can show will give the investor or lender a return on their investment, that will make them feel comfortable and confident writing me a check, because I can assure them that they'd get whatever that number is, 18%, 10%, 20%, whatever it is on their money. Can you show them a deal? Can you show them a deal? Like can you guarantee, and nothing's 100% guaranteed. We get that in this, this world, but is it more likely than not that you can get them the type of return on their money that they'd want to actually give you their money? Can you give them a good return? Do you have a deal? So make sure that you have a deal. Make sure that it makes financial sense to the investor before you even take it to them. Make sure you have your numbers worked out. Make sure they're credible numbers. Make sure that you can back it up, maybe by way of like industry norms, like what's happening around you, or in the case of real estate, you may want to look at the comps or the local market, and just patterns of people getting the types of returns that you're talking about. Show a decent deal. And by the way, not just a return on investment, but what about the backside, as far as like protecting the investor from losing money, protecting them, because above all, they don't want to lose money. They want to gain money, but the last thing they want to do is lose money. The first thing they look at, they don't want to lose money even before they gain money. So how are you showing a return on investment, and how are you protecting the investor? That's the first thing. Make sure you have a deal, because again, I go back to what I said a little earlier. What you perceive as a deal may not necessarily be what an investor looks at as a deal. So make sure you have a deal. Make sure you know your numbers. Make sure it's something that you can confidently present to the investor, and that you can back by way of pulling out more detail if necessary. You may want to show financial projections or different things like that to make them feel a little more at ease with what you're bringing them. So make sure you have a deal. Number two, in terms of getting funding for your project, okay? Number two, experience or your track record. How many similar projects have you done, say, in the past 3 to 5 years? Is this your first one, or is it your 10th one? Is it your third one, or is it your 7th one? How many have you done? It's always good to show experience. It's always good, especially like considering real estate, you want to show that you have a track record of doing similar deals, be it flips or ground up construction, or rental properties, or whatever niche that you're in. Do you have experience in self-storage if you're going after money for self-storage? Do you have experience? Or if you don't have the experience, does someone on your team have experience? Or if you don't have someone on your team that has experience, can you bring someone in with experience that would actually partner with you? That makes the difference a lot of times between getting a check and not getting a check. Now, I'm not saying that people without experience can't get checks. You could. It just becomes a little more difficult. They may look a little deeper into other factors that may be required to get you funding if you don't have the experience. They may look at your credit a little more. They may look at your income a little more. They may look at other things as well if you don't have the experience in your particular niche to make the investor or lender feel confident in giving you a check. So make sure that you have the experience and that you can show it and that you can document it with maybe the number of houses you closed, if it's like a fix and flip, the number of HUDs or whatever. Show them the experience of you successfully doing what it is that you are seeking money from them. Show experience. If you don't have experience, it will affect other things. Your rates, your terms. It will affect the amount of money that they may want down. So have the experience, or have the people on your team with the experience that can actually come to the table and show some projects that they've done that are similar to the one that you're approaching the investor for. Okay? Number three, as far as getting funding for your project. People miss this a lot. It's a very easy thing to really take note of, but you'd be surprised how many people approach investors or lenders and want these big astronomical amounts of money, $100 million, $1 billion, and all these huge amounts of money, but they don't understand that no investor or lender is going to put up their money without you putting up some of your own money. So the third factor is, how much cash or liquidity do you have towards getting the funding that you need? How much cash do you have on hand? How much in your bank account, or your whatever, your checkings, your savings, or even on credit cards? How much cash can you bring to the deal? 15 to 25% is typical in terms of what they would want you to bring to the deal. So 15 to 25% of the total amount of money that you would want from a funder is more than likely what they would want you to bring to the table. Okay, I'm not saying in all cases, but we're talking about the easiest way to get funding here. We're not talking about, raising a round of equity funding from an investor. We're talking about just taking a good project to someone and having them look at it and having them be interested and funded within a pretty short time frame as compared to like an equity investor. I'm talking about within like easily 2 to 4 weeks in most cases. When you approach a lender, you can get funding if you go the right way. Whereas an equity investor could take, I've heard of situations where people were working on raising funding for like 2 years straight for their projects. I've heard of investment bankers working on funding deals for 2 years straight, trying to raise equity funding from certain groups out there. So to me, and what I've seen out there, equity is a much harder fight as far as funding is concerned as compared to debt. But when you go to a debt funder or a lender, certain things, having them in order is much more likely to get you funded a lot quicker. Okay, so have the cash liquidity to put into the deal. If you don't have the cash, find ways to get it. You can actually bring a partner on board who has the cash, who's ready, willing, and able to put it up, to show proof of funds, maybe even to sign a letter of intent in terms of giving you the cash, or bringing it to the table. You know, you can get cash by way of getting some unsecured funding if your credit and your income look good. We have people that we work with, or lenders that we work with, that can get you up to 500K or more in unsecured funding. Unsecured meaning no collateral as is required if you have the right credit score and income. A credit score of at least 700 plus, income of at least 50K per year, you can get up to about 500K in unsecured funding. We have some secured funding partners that actually can leverage some assets that you have to get you cash. They look at 401ks, they can look at stocks or bonds, they can look at IRAs, they can look at accounts receivables, they can look at purchase orders, they can look at equipment, they can look at inventory, they can look at personal assets, yachts, aircraft, boats, cars, watches, jewelry, anything like that they can look at to get you money. They can even look at investment properties. In some cases you can do cash out refinances. In some cases you can do home equity, or HELOCs, or loans against the properties. So there are a lot of ways to get cash in your pocket that you can bring to the table for an investor to fund the larger deal. But they would more than likely want you to bring cash to the table of at least 15 to 25%. So if you want $100 million for a real estate deal, know that more than likely for the investors to really take a serious look at it, you would need to show from 15 upwards of 25%, which could be 15 million to 25 million. In some cases, it could be less. It could be as low as maybe 5%, depending on the situation, right? If you're doing a refinance, less money out of pocket is required. You would probably just have to cover like closing costs and things like that. But in most cases, with regard to like real estate funding, you would need from 15 to 25%. If it's business funding, like you want to purchase a business, or you have a new tech company, or something like that, still 15 to 25% is typical. So have your ducks in order. Have those three things that I mentioned in order. Have the deal that you can show is a profitable deal, number one. Number two, have the experience or the track record, or someone on your team with the experience or track record in that particular industry or undertaking. And then number three, have the cash liquidity on hand that you can bring to the table. And if you don't have the cash, have a leverageable asset or something like that that you can change into cash relatively quickly to take to the deal. Now, we're talking about debt funding here. We're not necessarily talking about you going out to get an investor per se. We're talking about a lender. All right, that's kind of like what you would need, those three basic elements for a lender to be interested in your deal. Now, there are other elements that you can look at as well. Credit scores. I mean, in most cases, lenders want like a 650 credit score and more. But I mentioned those three basic factors because we have lenders that we work with that don't even consider the credit score. They want low credit clients because they specialize in just deal funding and not so much the credit scores, right? So if you have the liquidity and you have the experience and you have the deal, we have lenders that don't even look at your credit scores and other things like that to determine whether or not they should fund you. So some lenders do look at credit scores. In fact, many of them do, but some of them don't. Okay. Other factors, they may look at your industry knowledge. Do you know your market well? They may look at the professionalism of your pitch deck. Different things like that are other factors that they look at. Your ability to present, your ability to answer any questions that they have, your team chemistry, stuff like that they may look at as like added bonuses beyond these 3 points that I mentioned. But as long as you have those three basic points, that would at least get you in the door and make you much more likely than not to walk out with a check. So make sure you have the deal, make sure you have the experience, and make sure you have the cash/liquidity to put down to get the funding. All right, so that's debt funding, as in like a loan. You know, you're paying the loan back with principal and interest over the period of however many years. We work with, I don't want to say we work with other funders, although we do, but I'm just saying it as a general rule, that there are equity groups out there that look at equity investments or raising rounds of funding, and so does, things like that for your projects. They are out there, and we work with a few of them, but they are a little harder to get funding from because it's strictly equity based. There's no, in most cases, money out of pocket in terms of like a down payment, so the project has to be that much stronger, and they'll probably look at a lot more detail, whereas the lender may not, because the lender's backed by, if it's real estate, for example, first position on the property, the lender's backed by the down payment, that you have skin in the game. Whereas equity groups are just pretty much taking a chunk out of the project and not so much requiring you a lot of times to come to the table with that 15 to 25% down. But although they may not want that much down, these equity groups, they more than likely probably would want some money down because they are getting smart too, or they are smart in the sense that they want to make sure that you have something on the table to lose just in case the project goes belly up. So if you want to make it easier on yourself as far as getting the checks, make sure you have those three things in place. No matter if it's a lender that you're looking for or even an investor, make sure you have some level of profitability for the deal, some level of experience, and some level of cash available to close. Those things will get you funded probably at least 90% of the time. Okay? Now, with that said, if you would like to find out more about our funding programs and how we can help you get funding for business or real estate or even personal reasons, feel free to reach out. You can send a funding request to me at bit.ly/funding link form. bit.ly/funding link form. And by the way, the first F in funding link form is capitalized and everything else is lowercase. So bit.ly/funding link form. And I'll put the link here in the description of this video. Okay. You can also email me your project summary or your situation summary to finance@revive-movement.com. finance@revive-movement.com. Okay. Revive Funding Solutions is my company name, but I'm part of a bigger company that I own called Revive Movement to revive the nations. So that's how I work to revive the nations. I do it in one way. Financially, I help people get access to their capital that they need, or capital that they need for their business or real estate investments or their investments or their personal life. Okay, so that's what I do. Get in contact with me. My eye is itching. I'm sorry about that. But above all, again, I'm a connector. I'm a person that knows a lot of people, meets a lot of people, and I bridge the gap between different parties. Wasn't expecting to ever get into the world of finance this deeply, but I'm glad I'm here because I'm helping you out. I'm helping people like you out, and I'm making a difference in the world, one deal at a time, I like to say. So I hope this video blessed you. Always have your deal in place, like a profitable deal. Always have the experience in place. I'm sorry about that. Always have your experience in place, or someone with experience, and always try to have cash on hand to actually close, from 15 to 25% of the funding amount. Have that available in cash. Those three things are the easiest ways to get funding. Not saying you can't get funding if those things aren't in place, because we have other programs available, but that's the easiest way to get approved for funding, is to have those things in place. And I'm sure you don't want to waste your time. You don't want to waste anybody else's time. Once you have those things in order, I think you're ready to present your deal. my friend. That's what you call a deal. That's what kind of like cause a funder's ears to perk up, because you have something that they can actually work with. All right. So with that said, you can find out more about me at bit.ly / actually not bit.ly / it's actually link linktr.ee / DNVM22. Link tr.ee / DNVM, the number 22. Those are my short links. It's kind of like a site that gives you all the links to my programs and businesses and books and social media and websites. You can find all that stuff under one link. Okay. With that said, excuse me, I hope this blessed you. Please reach out. Let's talk about your scenario. Let's see how we can work together to get you the funding that you need for your project, your business, or even your personal life, because everybody needs money sometime, right? That's why we're in business. Stay blessed, my friend. This is David. Talk to you real soon. Please like, comment, and share if this blessed you. And I look forward to speaking soon. Have a great day. Talk to you real soon. And always remember, one up in everything you do. Peace.